Taking a look at today's interest rate markets, let's look at the 10-year note futures today as they're selling off today. We're seeing them down now for a third consecutive session. And today's sell-off is a little bit more pronounced than yesterday. So we're seeing the 10-year note futures now pushing down to the 132 handle and 132.01 in the futures market. And, I think when you look at some of the factors playing into why we're seeing this pickup in selling pressure, a couple things. The inflation storyline, it's been in the store, it's been out there, it's been in the theme for the last several months, really. And then it got heightened a few weeks ago. I think that's why we did see some selling pressure in the treasuries. And then the market started to discount that a little bit as the Fed continued to maintain a very consistent message before they went into their quiet period. And now you're continuing to see some of these commodities pushing higher and pushing to multi-year highs. Copper pushing up to $4.50. The grains holding at or just off of multi-year highs. And so I think that is continuing to be a potential here why we're seeing some selling pressure. Couple that with the Fed announcement tomorrow. That's going to be released. So the Fed will be back out speaking about the potential of if they're going to change anything moving forward. The expectation is that they are not, but you never know. And also with the most recent data points, there is a reason to think that there will be a potential for a pickup in inflation maybe a little bit sooner than what the Fed has priced in at this point. Third thing, auction results today. We had $62 billion of 7-year notes auctioned, and the perception is that the demand was adequate but not strong. And we did see some selling pressure come into the Treasury markets after the release of those results, I should say. And so I think that's another factor why we're seeing some selling pressure here in the 10-year note futures. Now we look at the yields. We are seeing yields heading back up over 160 basis points, actually 162 basis points currently. So a little bit of reversal in the last few days, and now we're seeing we're pushing back into that low 162 level in the basis point camp for the 10-year note. And again, all eyes will be on the Fed tomorrow as we're seeing the market kind of maybe shifting and with the expectation that maybe the Fed will blink. Hard to say. They have been very consistent, as I mentioned, but it does feel like some of the selling pressure in the last couple of days has to do with the idea that the Fed could certainly have an impact in the Treasury markets with the announcement tomorrow.